Hello traders, and thanks for tuning in for the Trade of the Week by Exness. My name is Stanislav Bernukov, Senior Trading Content Specialist here at Exness. And in today's video we are going to be checking on a possible trading idea for the week ahead, the narratives behind it and which economic data could potentially affect this trade. But before that, let's see how the previous idea performed. There was a possible long position for the AUDNZD with 1.19 target as the momentum trading idea. The idea was completely correct and has reached the target several days after the publication. In total, starting from the beginning of 2025, we brought 50 ideas with 38 of them being successful. That means a rough hit rate of 76% for the published ideas. For this week, we are monitoring a potential long position for gold with a target at 5,600, the previous all-time high. Gold serves as a protection against geopolitical uncertainty, which we currently observe in the form of military escalation between the US and Iran. That is a very strong driving factor, which might boost volatility for the instrument. Technically speaking, it has jumped with a gap on Monday, leaving the empty space between the current range and the previous trading range. Usually that points to a strong price discovery regime if the price holds near achieved levels. From a daily chart perspective, the price moves for 10 days in a row in the upswing, having touched the upper band of the Bollinger Bands with a parameter of 20. Usually that points to the continuation of the trend for a couple of days more and may lead to the acceleration of the upside move and reaching the previous all-time high around the level of 5,600 or even higher. What are driving narratives for gold other than escalation in the Middle East? First off, the jump of crude oil may boost inflation expectations in the US and across the globe. We've observed the jump of yields of 30-year government bonds of the US as a reaction to that. The connection between inflation expectations and gold is quite simple. Gold is perceived as an inflation hedge, and as the debasement narrative is still active, it may accelerate the bullish momentum too. Another angle which we might use is the commitment of traders report from the cftc.gov, which we've mentioned in the previous report. It flashes the new peak of the net long position of commercial traders for gold futures, which means that the institutional players are buying gold rather than selling. Which economic data traders would pay attention to? The main thing, of course, which is in all headlines now, is the military escalation between the US and Iran. But also traders would pay attention to the NFP report on Friday. It is the strongest economic publication that might influence all markets, gold included. Interestingly, either strong or weak NFP report may support gold. In the first case, traders might pay attention to the inflation narrative. In the second, to the debasement narrative, which means the depreciation of the local currency, which is the US dollar in our case, and a rush of investors to search for alternative investment vehicles. So in summary then, the idea for this week is a long gold position with a target area at around 5,600. The military escalation in the Middle East and the strong technical situation may boost the momentum for the gold market and lead it to establishing the new all-time high at around 5,600 level. Remember, this is not a signal, it's just the idea for a trade, not a guarantee of success. Always do your own research and never forget to manage your risk.